Something that could make a US rate hike in June more likely is the fact that there is a scheduled press conference afterwards. Daniel Murray, EFG Asset Management. Firstly then, the Institute of Fiscal Studies and the G7 leaders publicly warned against a potential Brexit, the latter group declaring that the UK opting to leave the EU would be a serious threat to global growth. How do you assess the performance of the UK's economy with the referendum fast approaching?
I think nobody really knows what the long-term impact will be because we've never gone through an event like this in the past, so we don't have anything against which to compare a potential Brexit. But I think in the short term we have already seen that there's been some drag on activity as people have deferred or cancelled investment and spending decisions, and that's also associated with an increase in uncertainty. And of course what markets don't like is uncertainty, and what economic agents don't like is uncertainty. I think that that drag on growth was evident, for example, in the GDP data that was released yesterday, where we saw the investment component of that grow less rapidly than had been expected, and then in the previous release. And we also seen it in some of the more shorter-term economic indicators, such as the PMI data. I think that if we were to exit, and at the moment that looks relatively unlikely, with the bookmakers pricing only about a 20% probability of that happening, but if we were to exit, then that whole process of uncertainty and deferred cancelled investment decisions would roll on for during the negotiation period, which is expected to take about 2 years.
Meanwhile, the US Federal Reserve continued to lay the groundwork for an interest rate hike within the next 2 months. In fact, a senior policymaker was reported as saying it is likely to happen fairly soon. With so much happening in June, would you be expecting action by the Fed in July as more probable?
I think what's really interesting is that just over the past 10 days, we've had a number of high-ranking Fed officials come out with more hawkish statements. So by my count, 5 out of the 10 voting members of the FOMC have come out with relatively hawkish statements over the past 10 days. So there's a clear bias on the FOMC to hike rates. We're going to get more colour on that when Yellen speaks. I think it's notable for June that there's really 2 cross currents that are taking place. First of all, the Brexit vote, and that's in an international context, that if it were to happen, that would cause a large amount of international uncertainty, and so that's something that they might consider. The Fed's been more vocal about the cross currents of the global economy and its impact on the US economy more recently. And the second thing, of course, is that something that makes June more likely is the fact that there's a scheduled press conference afterwards. I expect that what will happen is that between now and the FOMC meeting on the 15th of June, we'll see the probability of a rate hike continue to increase, and that, of course, is contingent on the data coming in. I don't think it has to be incredibly robust, but as long as the data looks okay and it's reasonable, then I think we're certainly going to see those probabilities increase as we head into that meeting.
Lastly for today, which economic indicators will you be keeping a close eye on that have the potential to move the markets next week?
Given that it's month end and month beginning next week, it's quite a big week for data. I think there's a couple of warm-up acts in the sort of middle and beginning of the week. So we've got some European inflation data coming out, which obviously will be important from an ECB perspective, and we've also got it's PMI week next week, which obviously gives us a very good angle as to the short-term direction of the economy. Then, of course, later in the week, we've got the ECB is meeting itself on the 2nd of June, and I don't think Draghi is expected to do anything, but I think what's more important there is what he says and what he signals in the press conference following that meeting. And then we've got the big one on Friday, which is non-farm payrolls. And of course, this is always a big release that the market watches very closely. And I think it has added significance on this occasion because of the potential to signal something further about the timing of the first US rate hike.
Thank you, Daniel. Be sure to check back on Monday for the week ahead with Kais Khalil. Have a good weekend, and the TV team will see you next week.